Hello everyone, welcome to the Ichimoku daily analysis for gold for Wednesday, June the 17th. On an interesting trading day today, we have a new first time frame uptrend. The market made a higher high and a higher low. What's interesting is that we only just took out the high of yesterday's trading. So even though, because we had a change of trend to the upside, the bulls are in the ascendancy, they really don't seem to be that strong. Now there are some other things that we need to look at though for this candle, and that is that the candle color is green, and that's bullish as well, so it means that the bulls have made net gain. One thing that's limiting that is that it's only a fairly small body compared to the previous day and quite a few of these other candles around here. So it means that they haven't made as much net gain as they did the previous day. Now, a positive is that the market closed up near the high of the current candle, and that means that the bulls have closed in control and they're showing some sort of commitment. But for them to have showed stronger commitment, we would have liked to have seen the high of yesterday taken out more substantially, and for the market to close up above that high, and it failed to do so. Now, as we know, this long shadow here on the bottom represents buying, so the bears tried to take control of the market during the day, but the buyers came in and pushed the market up. So more bullish than certainly bearish for today's trading. Now, we highlighted that if we did begin a new first time frame uptrend, we were likely to trade up towards the neckline here, which is still on, so probably tomorrow, if the uptrend continues, we'll be trading up towards the neckline, which is what happens quite often when we break head and shoulders patterns, and it gives us another selling opportunity. So what we need to do if the market does trade up there tomorrow, we'd like to see a bearish candle then tomorrow, or the next day a bearish candle for a signal to go short, and then the market will probably trade down towards the Kumo or the cloud. And the market will also be interacting with the Kijun-sen and the Tenkan-sen too if it does trade up to around that region. Now interestingly, if we look at our Tenkan-sen line here, it's turned flat, which means that the market has no momentum. We can see how this market is forming a little congestion area here. So we do need to trade up above the highs of these candles for us to be a bit more positive about us retracing back up towards the neckline. Now looking at our cloud, we're trading above the cloud, so that's very important for this market. It means that the market is still fairly bullish if we're trading up above the cloud. And we'd expect that if we do sell off, that we'll trade down towards the bottom of this cloud, or the top of the cloud here, and we'll find support down there. Now we also know that when the cloud turns flat, it's an attractor of price action, so it's likely that the market will trade down to there fairly soon. Looking at the configuration of the Tenkan-sen and the Kijun-sen, the Tenkan-sen is still on top of the Kijun-sen, which is quite interesting. I expected that we would have had that crossover fairly soon, but that hasn't happened. But they're very close together, so that crossover could occur within the next few days or so. The market, though, if we look at where the market's trading in relation to these two lines, it's trading down below both, and that's quite significant. For the short term, trading down below the Tenkan-sen is bearish, trading above it is bullish, so we've been trading down below it for quite some time, and we have a second time frame downtrend. So what we could be seeing at the moment is just a new first time frame upswing and a second time frame downtrend. So we'll probably rally up to around here, sell off down to here. So an interesting day to watch trading tomorrow. Important to watch the high of the current candle, and to watch this very short-term support that's been set up down around here, which coincided with where the market started to rally up from the top of the Kumo.